Good afternoon, and welcome to the workshop of the project called Innovation Networks for Active and Healthy Aging. And behind this long and complicated name is actually a really simple question: how we can scale up innovative solutions for the elderly across Europe, not only here in Estonia or not only in Portugal, but really how we could do this so people across Europe can enjoy their active lives outside the care homes as long as they can. And today we are talking about really fascinating question: how to finance innovation for the active aging market. So we do know that we have people who do need the innovative solutions. We do have those solutions as well. But there are a lot of barriers on the way to develop these solutions and scale up across Europe. And one of the questions is where to get money for the development of solutions, how to attract investors. And today we have here Alo Treial. Alo is senior consultant from Civita, and Alo will give you a really short introduction what is happening on the market, and a short overview of business models. And then we have a real investor also, investor is from the founding partner of Tera Ventures, and he's Andrus Oks, and he's we can say quite experienced investors in health and care sector. And later, after the two presentations, we will have a discussion, really questions and answers, hopefully also. And you all have a opportunity to ask questions. Either you drop your question into this chat box, or later on, if you just raise your hand, and then you can ask your question during the conversation. So I guess that this is all for the from my side. And Alo, the screen is yours.
Yes, thank you, Piret. As Piret mentioned, my name is Alo Treial. I work in Civita Estonia as a senior consultant, and also I have some experience with startups and investment funds. Then most of what I'm going to speak today comes from extensive desktop research that we have done during the project here during a couple last months. When we started this project, and then when I started with the task to understand how the investment landscape works here, then one of the assumptions was that the investment in the sector doesn't work, and there are huge gaps. When I went on with the research and went through different sources, then came out that the situation is a lot better than it seemed at first. So when we talk about the overall active aging market, then it's obvious that it's growing really fast, it's growing very fast, and the population above age 65 is growing rapidly in coming years. This is something we all know. Also, we can all conclude that this requires that we must have technological solutions to accompany these changes in the population. Yeah, if we can get slides in a couple of seconds. Yes, if we talk about the market for active and healthy aging services, then we can't talk about one market. It's a very segmented market with various niches, and it's mostly centered around health solutions, digital health solutions, and the other major part is smart home solutions. According to one estimate, the market for such digital solutions for elderly is already at 160 billion euros in European Union alone. So this creates like a great starting point. So if we talk about different service providers, then here is a small map of the overall landscape from Redpoint Capital, who is an early stage investment fund, and then they have mapped out their vision of how they segment the senior care market. And if we talk about investors who are active in the market, then to my surprise, there were actually quite a few investment funds active specifically in that segment. For example, the Primetime Partners was founded in 2020, and they already have made 12 investments to different age tech companies. The Mediterranean Towers Ventures, they are in Israel, and then they are also doing a lot of investments into startups, specifically in the active and healthy aging market. One good example is Mangrove Capital Partners. They are actually an early tech fund. They were actually first investors, one of the first investors in Skype. They were one of the first investors in Wix.com. So they have been kind of pioneers in various ways. And the CEO and founding partner of Mangrove Partners has said that for him, the next frontier will be the aging and elderly market. When we talk about investments that are happening right now, then we're mostly talking about solutions for elderly care homes or care facilities. However, Mangrove has said that they want to invest specifically in solutions that are aimed at the people themselves, not specifically perhaps solutions aimed at care providers. So this is the change we're going to see. Later on, I'm going to show you a couple of examples from the investments that have been happening on the European market. And right now, the market is very tilted towards solutions for care providers for senior homes. But we see that this is changing. And then when we talk about when we talk about Mediterranean Towers Ventures, then again they have said that they want to invest into companies that are actively engaging the elderly community rather than them being the recipients of a service. So this is something we can see is happening. Right now, the investment market is very much US centered due to the insurance, private insurance in that market. However, Europe is catching up, and a lot of investors are saying that Europe will become the hub of such investments and bringing out Scandinavia and Netherlands, for example. One investor in an interview brought out that she sees that the market is in similar state right now as fintech was in 2007. So in 2007, the financial sector was still quite conservative. It was huge, but it hadn't adopted the digital transformation yet. So, but right now we are talking about huge fintech companies revolutionizing the field. So in her mind, she saw that the market will follow the exact same path for active and healthy aging. If we talk about what the current investors are saying about their investment targets, then one of the issues is that they see that the tech sector right now doesn't really take into account the actual needs of the elderly people, and then they want to just design the services with their knowledge and don't involve the stakeholders actually enough. So this is very well aligned with our project, that we have specifically work packages that will emphasize the need to involve the actual people who are going to be using those solutions. So if we take a look at the Crunchbase, that is a database that tracks investments into different companies, then for elderly care funding has pretty much quadrupled in last 5 or 6 years. As you can see, it has really started to take off since 2015, and it has, and also the amount of deals, the amount of investments made. However, according to Crunchbase, 80% of this funding goes to business-to-business services that are serving nursing homes and other facilities like that. So if we talk about some examples, then the big tech companies, Facebook, Amazon, Google, Microsoft, they are all starting to get into this field as well. They're doing both. They're having age-inclusive products. These are the products that are designed for general population, and elderly people can use them as well. This is nothing special. This is nothing new. However, all of these companies are already stepping into the market for specifically products designed for elderly people, which is very nice to see. They are doing investments into early stage startups. They are acquiring more mature age tech companies, and then they're creating age tech products. For example, Google has venture capital funds, and right now they are mostly investing into pharmacy services and medication services. However, this is soon going to be changing. Similarly, Samsung is investing into robotics for elderly companies that are developing help and communication robots for elderly communities. And when we talk about age-specific products, then, for example, the latest Apple Watch has a fall detection, and then the new Amazon solution where there is this one-button calling services for elderly, so they can keep in touch with their loved ones. And when we come to the European context, then actually, as you can see from the slide, there are quite a few startups that have received funding, and then these are really great success stories. For example, Birdie has developed a smart home solution that has sensors that provides information for care providers, so elderly people can age at their own home and they're still supervised. For example, No Isolation, their first product was actually designed for children with disabilities, so they can have like a telepresence robot in classroom, so they could take part of class activities. Their second product was designed specifically for elderly people, so they would have like this one-button screen that loved ones can send videos, photos, and then make calls with. So it's like a really easy user interface. When we talk about, for example, Libify, then they have developed a emergency call system where again an elderly person living alone at home can have a very good care service 24/7 thanks to their hardware and also their network. So all of these examples for me show that the market isn't in as bad a shape as I thought it was when I started this project, and we hope to see that it's going to skyrocket in a couple of years. However, there are still large barriers in the market between the investors and the startups. And then one of the goals that we're going to tackle during our project is to trying to figure out why are there these barriers and what we can do to lower these barriers. So innovators developing solutions for the elderly community could get funding they need. So that's why we have invited here Andrus Oks, who can maybe share his perspective, how he sees the healthcare and then specifically elderly care market developments in the coming years. So thank you from me.
Yeah, thanks a lot for this opportunity, and yeah, perhaps I should first explain well why I'm here, or yeah, what gives me the right to say anything about this particular industry as well. So yeah, I'm one of the founding partners of Terra. Terra is a Tallinn-based seed fund. We also have presence in Helsinki and Los Angeles. We're broadly seed, so from early till late, and yeah, we are actually industry agnostic, meaning we invest in anything within digital. And actually, yeah, that's part of my point that well, many of the generalist funds actually are looking into, well, health tech as well. So and yeah, we for us is partly theme based as well. So we certainly are following themes, and most notable is actually AI machine learning. So we've been investing in that for more than a decade, and yeah, we're currently investing from our second fund, 45 million euro fund, and yeah, within our existing portfolio, we've done 3 life science deals across 2 funds. So it's like, yeah, perhaps almost like 10% essentially of portfolio companies. And my other point is that actually the focus or relevant focus is beyond health tech even. Yeah, we have 2 portfolio companies, which well, one of them is a sports technology company, and the other one started as an ad tech company, and they've both essentially they are essentially positioned, one from quantified self perspective, and the other one they released a new product recently, which is, yeah, in this health and wellness space. So yeah, it's to understand this opportunity fully. I mean, it's useful to look beyond just very strict definitions of well, elderly care and well, life science or health tech. Yeah, it's possible to approach it from several other angles as well. So but yeah, let me give you a bit more details. So yeah, one of the latest investments I myself did about a year ago. Yeah, it's a company called Transformative AI. So these guys can detect and predict cardiac arrest ahead of time in ICU setting. And obviously, yeah, this is well, a breakthrough technology. Really, doesn't anything like that doesn't exist currently, and well, the promise of that is well, quite substantial. Essentially, really saving lives. But yeah, currently it's in ICU setting, right? So, but their vision also is to once they have dominated this initial niche. I mean, they're planning to branch out, and one of the most lucrative applications actually is elderly care, or more generally, again, if companies like that, if products like that can keep people out of hospitals or out of elderly care facilities in their homes, but at similar care level, then I mean this is the best solution for everybody, right? So it saves costs for the healthcare system. And obviously, staying at home is a preferred choice for individuals as well. So, and yes, that's perhaps important to understand more generally that indeed, I mean, this the whole space, the whole opportunity is much wider than just well, health tech or technologies directed strictly on elderly care. So yeah, for instance, this another portfolio company we invested also about 1 year ago. So they are in sports tech, but as I said, I mean, yeah, they are able to actually measure the activities and then the movements of people precisely as such. So yeah, this quantified self aspect again. I mean, this certainly enables to monitor the well, the activity itself, but also, well, how the person is moving, or yeah, detect again perhaps useful signals that are can be interpreted to actually yeah, predict decay of movement, or any other relevant stuff for elders as well. So um, and so I mean, like what I'm trying to do here is to show that this opportunity is actually much wider and more attractive. And by the way, the if you look at actual numbers within this health tech as well, or real life sciences, biotech more generally, then um, it's not actually small also. Like the historic data on actual investment levels here in Europe in this sector, it is actually comparable to ICT. Maybe it's like 40% lower, something like that, but it's certainly there. And I mean, even in this view that the performance of those investments for the investors is also comparable to ICT. So yeah, some of the performance data suggests that many of the top performing funds in health tech or life sciences are actually, well, comparable to digital funds. So it's certainly an attractive opportunity from that perspective as well. Money is available, and of course, this current COVID situation has well, further made clear for everyone that health tech needs to be addressed, healthcare investment needs to be addressed. Otherwise, yeah, we are all running into similar situations in the future as well, or yeah, even without this COVID. I mean, it has been obvious for quite some time that it's a problem, especially in the US, that the healthcare sector consumes so much resource. And yeah, as usual, well, technology can be an answer here. So and obviously, investors are paying attention. There is surely quite a lot of new money flowing into this, and same is true from grant perspective. So yeah, health tech companies in particular are very well positioned to raise substantial grants as well. Of course, I mean, this poses perhaps another issue that many of the also early stage investors actually expect that the startups have already built something substantial with grants, and they are well having this luxury position that okay, if you have built something substantial, then we would invest because yeah, I mean the risk level of such new products is yeah quite well known as well. So it's yeah, first you need to build the products, then you need to jump through those regulatory loops, and only after then you can actually well start selling the product, and then you will be able to well validate the market in a sense that well are they actually willing to pay for it, right? So and this is well a clear difference with other industries, right? So it's much more complicated to actually do that. And yeah, timelines are longer and stuff like that. So and by the way, there is a very notable development to address this problem in the US. So recently, in January, US actually passed a legislation suggesting that all those breakthrough devices, breakthrough products in healthcare sector, they would get guaranteed or essentially automatic reimbursements after they have gotten the FDA approval. And obviously, this is a game changer from many perspectives, right? So also from investors' point of view, or yeah, startups' point of view, that if this sort of final and actually well, most hard to predict risk perhaps is taken away, or yeah, the reimbursement side of it is guaranteed, then well everything else becomes easier. So my hope certainly here is that the this will be actually implemented and properly instituted in general, and I'm hoping that well, if US is leading with this, perhaps EU can actually do something similar. Well, the challenges to do that within EU are probably even higher, but still, yeah. So certainly, yeah, there is a lot of movement. I'm sure there is lots of great companies being created right now around this topic. So hopefully you have some questions as well. So
I just you as an investor, when you take a look at the demographic trends in European Union and the aging population, how does that make its way into your investment strategy or your fund's investment strategy? Do you see it as a challenge or as an opportunity? And then what kind of change it's going to create in the macroeconomic level, in your opinion?
So yeah, I mean, in this whole elderly care perspective, I mean, obviously the population is aging quite rapidly. Already has aged, but this is still an ongoing trend. So yeah, from investment perspective, that's investing into such startups actually address this problem. I mean, certainly that's a positive, right? So other than that, yeah, I think the market is quite large. This digital transformation or transformation by any technologies really is currently still in the early days, really. So, I would not be concerned about market size in general. Obviously, it depends very much on the particular product or approach. So.
Okay, that's good to hear. When we talk about, for example, the investment decisions that you made in the when we talk about the care market, for example, the transformative AI. So, what are the criteria for the startups that you look at first to assess or to evaluate the proposal that lands on your desk?
So, I mean, it's pretty standard, really. So, how large is the pain point that the startup is addressing, and how impactful is the product? What's the actual impact of the product when it's being deployed? And if answers to those questions are that that's large and impactful, then the next question is that okay. What's the competitive positioning really? How and how can this particular team succeed with this plan? Obviously, there are many details beyond that. Yeah.
About grants being available for product development and early stage development. The EU as a whole is very much working towards more these blended funding opportunities where the EU expects, or the public funds expect that private investors match their contribution. So that we give the startup the grant if a private investor matched that grant. This is the blended financing format that is taking place. How do you see this influencing the market? And then what are your recommendations for early stage startups? How to get this kind of funding and how to find that private investor in that case?
I mean, certainly, startups should try to get that money. So, and of course, I think in some cases it sort of raises the bar. It's more difficult to get investor money. So to match government money. So yeah, compared to pure play grants, that's potentially a bit more difficult to get. But yeah, what can you do? So yeah, from investors' perspective as well. So so some of those grants are certainly useful, and so we welcome these as well. Yeah.
One thing you mentioned was this: who is going to pay for it? Especially in the AHA market, where we talk about this is actually a very large question because a lot of the solutions are aimed at getting this public reimbursement that you mentioned for the US case. So there is this kind of hen and egg problem because the national health services or other funders, they expect that they provide funding when the solution is on the market, or they approve that they will reimburse it when the solution is on the market. But on the other hand, investors want to see who is going to pay for it. So how do you see this gap between investors wanting to see the market potential, on the other hand, the reimbursement is going to happen only after the product is on the market?
So as mentioned, the US new regulation is focused around breakthrough devices. So that's, I guess, one of the solutions. So they actually validate the opportunity beforehand. So they determine if this is a breakthrough device that is being developed. And if they validate it, if they categorize it like that, then this automatic reimbursement applies eventually. So yeah, they just step ahead. They start earlier by doing this categorization.
Okay. Another thing that you mentioned was that your fund and other funds that are like these generalist funds that are perhaps industry agnostic or sector agnostic. If we talk about such funds, then when we talk about age-inclusive products versus age-tech products, so products that are mainly for the general population and also involve elderly community, or products that are specifically for the elderly community, do you see it as a disadvantage that a startup would position themselves only for the elderly community and then not the general population?
I mean, yeah, a clear focus is usually very helpful. So it's not a disadvantage at all. Yeah.
Segmentation, the better. If you know exactly your target, then it's actually a strength. Okay.
Absolutely.
Yeah. I think we have some questions from the chat, and then I'll let Piret ask some of the questions from the public.
Yeah. Thank you for a fascinating presentation. And here we have a few questions. And first is from Diane. And Andrus, you referred to life science and biotech, but surely little in that field is actually welfare tech or health tech? Question mark.
So I mean, yeah, I'm looking at this broad data set of Invest Europe, and they don't give a more granular view on this. So I'm from that I was suggesting that this whole field of life sciences and health tech and biotech is sort of comparable in size from investment perspective with ICT. I think it's potentially even wider. So yeah, some of the ICT investments could actually follow into or be invested into health tech or healthcare as well, but may not be qualified as such. So yeah, I mean, getting the exact data about these particular segments that you are currently talking about, I guess that's certainly a challenge. Yeah. So, but and as said, I mean, even if you're investing into a purely digital company, I mean, it's possible to actually build with your digital technology. It's actually possible to build particular products for this health healthcare or even elderly care market as such as well. So it's not easy to characterize the whole opportunity consistently, but all I'm trying to communicate here is that it's don't be sort of concerned about I don't know, some views that the numbers are small, or even if the numbers currently are small, this is just a gap from the perspective that, if the problem is real, if your product is potentially impactful, then you can, go after this opportunity and make it larger. So others haven't still capitalized on this opportunity. You can, right? So.
And I think this is something that I actually forgot to mention, but I really like that Andrus mentioned it just in the beginning of his presentation, was that when we talk about this market, then we can't get stuck on this healthcare market. And I think you very well brought out like this, for example, the sports tech, or when I did my research, I stumbled upon solutions for travel agencies, for online travel agencies, specifically for people with disabilities. So the healthcare market is only a small portion of everything that makes the aging experience better. So we have to definitely look beyond that, and I really like that Andres brought it out.
Okay, thank you. Second question is, how much do you look at buyouts, like micro enterprises likely to be bought out by the large data companies as an advantageous opportunity? Do you see this like something to invest in?
Yeah, I don't have much of perspective in this regard. So obviously, I mean, any startup should be thinking about eventual exit. So yeah, in this field, I guess the potential M&A partners or buyers of your companies are essentially well a specific set, but I guess the main story is the same. So buyers want to buy companies, buy startups if the startup is positioned in something where what is valuable for the buyer, right? So if you are somewhere where the buyer wants to be, well, they will buy you at some point. Yeah.
For example, in the US a couple of years ago, Best Buy, a large retail corporation, acquired a Crate Call startup that is a startup that is basically helping elderly community get to use the digital services that we all use as a daily. For example, it enables to order Lyft rides or Uber rides through phone for the elderly. So this was Best Buy saw it as a complementary to their online and digital footprint, and they acquired it for, I think the acquiring price was 800 million. So there are actually quite a large buyouts already happening also in this market.
Really practical question. What would be the typical period when investor would expect return on the investment on active and healthy aging market?
So yeah, I don't know a specific answer, but I'm pretty sure that most of sort of specialized investors are well smart in a sense that they are allowing for longer exit times. Yeah, so usual digital investor is thinking about 5 to 7 years exit period, but yeah, in health tech in this particular field, yeah, it's probably longer.
Good to know, because actually this was also one of my questions, is that in that sector the buyout or the growth takes time, and you see that investors take into that account, and then they are willing to wait longer.
Well, I mean, I'm talking about early stage investors, obviously. Later stage investors, they can have shorter periods and so on.
Here is one question actually to the audience, but I guess I can ask it from you as well. Audience can reply in this chat box. Do you see value in a possible collaboration scenario with pharma companies developing therapeutic alternatives for the management of specifically age-related diseases, like collaboration with big pharma companies?
So, and that's actually an insightful question from that perspective. That yeah, those generalist investors like I am or Terra is, they usually stay away from those pharmaceuticals or life science focused opportunities. So we can do health tech, which is easier to understand. Yeah, in pharma, you need investors need to be PhDs of that field, and much larger pockets. we are aware of our limitations, and yeah, we are staying away. So I don't know the specific answer to that question. So.
Question is
so, and my point is that yeah, if you should sort of know, well, of course you know that are you like really life science or are you health tech? So if you're health tech, you can talk to generalist investors as well. If you're life science, generalist investors usually are not targets.
yeah, the context of the question is that the value-based medicine, where what matters is not the specific benefit of a health technology in terms of efficiency and safety, but of improving health levels by the integration of complementary approaches to the holistic management of a health problem. Shortly, it's like the patient-reported outcomes and stuff like this, I guess, the quality of care. This is the background of the question, but I do get your point that everybody should stay in their own shoes, at least from your perspective.
And it's not just from the aspects that, okay, can I get their money? I mean, those truly focused investors, they are more helpful for you after they invest as well. So yeah, generalist investors usually are they can help as well, but well, they have less domain expertise.
Here we have few like support for your, like, indeed it means looking beyond the headlines, and as an investor you surely do that, and also probably the colleagues in EIT Health have experience in seeing how that happens to the enterprises that are successfully in the program. I guess this is like supporting you to have a broader view on the topic, not only focusing on specifically on healthcare. But I don't have any questions on the chat anymore. Alo, you have?
Yeah, I just wanted to kind of summarize one point that we discussed when we have those startups, and when we talk about the current caps. So we discussed already quite a few of them. So the generalist investors or all investors obviously want to in long term expect to get their financing back. So they want to see, at least in theory, a profitable business model. On the other hand, they want to lower the risks, and for that they want to see something ready. As you mentioned, they want to see that you have already built something. And first thing that you brought out was that you look at the team and how the team is like how ambitious and how knowledgeable is the team. If you take a look at yeah, like proposals that land on your table in the health tech, for example, in the health tech, then are these the main gaps that for the companies that you don't fund, or is there anything else to bring out that make you say no?
Yeah, I mean, it's hard to generalize. So there are many reasons to say no. Yeah, it's usual that we out of 100 we say no to 99, right? So what I would sort of say is that yeah, I mean, if it is a real pain and you're a large pain point and you're providing something which is a breakthrough device, then not just from investors' point of view, but from anyone, you would get much more attention and yeah, at least willingness to help. So what I've seen in case of my portfolio companies as well, for instance, the eagerness amongst the healthcare providers to actually collaborate is something which is like really surprising. So these are not your usual customers. They are they are really interested to do whatever it takes to actually validate the product. We in case of transformative, we are actually collaborating with one of the largest hospitals here in Tallinn, PERH. And yeah, they are actually top-notch physicians there as well, and yeah, their commitment level to collaborate is something well, it's hard to see in case of other companies or their customers. So yeah, it's and obviously, well, these are truly good karma opportunities, anyways. But yeah, I mean, those I guess it's really great people that are usually involved in those projects on the customer side as well. Yeah. So yeah, you can get a lot of encouragement and commitments if your approach is special. Yeah.
So did I understand correctly? If you see that there is a real problem, real pain point, and the solution will actually tackle it, then actually the other shortcomings that are there aren't necessarily like red flags, but this is something to get through with together.
Exactly. Yeah, that's the right way of thinking about it. Yeah. So if I believe in the opportunity, if I believe in the team, I'm rather on their side and trying to solve those challenges. Right? So if the challenge is really hard and I can solve it, then the reward for this is very special as well. So yeah.
Okay.
These are usually these are details that are possible to resolve. Yeah.
Okay, that's good to hear. Thank you for these insights.
Yeah, and thank you for following us or listening to this to this workshop or this seminar. For the further information, yes, there was a question, are those slides also available? Yes, follow us in Facebook, Twitter and LinkedIn and you will find out where to see the slides. Also, we will continue discussions with you, Andrus, as well. Either it's on social media or bring your point of or bring your point of view to this discussion more deeply in the future as well. So thank you to all of you, and see you during. I don't know when we have next seminar, but yes, Andrus.
Let me make one more point here. So
yeah.
During the last year or so, I've been involved with a new health-focused accelerator here in Tallinn, Health Founders. So yeah, these guys are industry specialists certainly as well. These guys, they can be helpful, and yeah, but I'm making a more general point here. So it's yeah, we are sort of working with various players to build this whole ecosystem for that particular industry, building a more elaborate, more mature ecosystem around here as well. So yeah, more things to come here. So yeah.
Thank you. It's a good point to end our seminar. So thank you to all of you, and see you next time.
Thank you.
Thank you.